strong highs and lows, how to enter inside the market where other people hit stop loss, and this is exactly how bank and institutional buyers step into the market knowing damn well that other people hit stop loss. So quickly, my name is Oscar Madsen. I'm a funded trader as well as a personal coach inside the Trading Academy, and with this YouTube channel I'm trying to give you guys all the technicals you need to have in order to become a profitable trader. Now let's get into the video. So we're going to go over what it is, what are strong highs and lows, how you can find them inside your chart, and how to use them inside your entry model so you hit less stop losses and get a higher win rate percentage. So first of all, what it is. What is a strong high and low? Well, if we take a look at the chart, a strong high and low is a low that is strong. It explains itself. It is a low that we do not expect to break, but expect to get respected in order to move up higher. Just for example, this low over here. This over here was a strong low, and what you end up seeing is that we move away from that low and we do not break the low. Over here we also have another example of a strong low. We move away from the low and we do not break the low at all, also not over here. So those are a couple of examples of what a strong high and low is. So now that we've seen what it actually is, now we know a bit about the strong high and low. So we know that if we have a strong high, that this could be possibly a place where we put our stop loss above. Why? Well, because we do not expect to break that high, we expect to trade down lower and away from that high. Also, if this was a strong low, this would be the low where we would want our stop loss to be underneath, because we do not expect to break it, we expect to trade away from it. So now that we know this, now we can take a look at how to find those actual strong highs and lows before the move is already gone and we cannot enter the trade anymore. So how can you find strong highs and lows before they actually move away and you already see price rejecting that moment? Well, first of all, you will need a point of interest inside the markets. So as you can see over here, we just took liquidity underneath these lows. I think exactly, we took extreme liquidity. So from around this point, we're looking to reverse up higher. Now what can we see? Well, just before we grabbed that liquidity, we moved up higher. This was a trick from the markets, which were actually early buyers, because they stepped in before the actual move or before we actually took liquidity, and then the next time we can actually make the move up higher. So again, we have early buyers stepping into the market. Where are their stop losses? Over here. We swipe their stop losses and then we trade up higher. So that's how you find them. Right, again over here. We want to trade up higher from this demand zone and this liquidity, for example. Well, then what do we see? We get our early buyers, because from that liquidity we get early buyers into the market. They get swiped, their stop loss gets hit, and then you will see the real move into the upside. So where do you then enter? Because what could happen is that possibly price just fails or just breaks down lower again and again and again. As you can see over here, for example, we keep on breaking the lows. So how do you know that we're actually going to reverse? Well, here is a great example. So we swiped the low and we made a strong low over here. But this low is only strong once we get the fractal change in towards the upside. So what I would recommend to use is the fractal indicator, so you can know where the strong high or low and when it is created. So as you can see over here, at the moment this is not yet a strong low. We swiped early buyers, yes, that's true, but we only need to wait for this high to break and then we can enter the long position, because then we know that the actual low, the strong low, has been made. So let's wait and let's see what happens. We keep on moving up higher a little bit, and then now we break this structure. So now what do we know? Well, we broke structure, so this low is now a yes, it is a strong low. And what do we know with strong lows? Well, we can place our stop loss underneath because it's safe and we will trade away from that point. If we didn't had any point of interest over here, then this all would not make sense, because as you can see, somewhere around this point, for example, we swiped the lows and then we broke in towards the upside, so you would expect to trade up higher, but there was no real point of interest over here. We didn't yet, for example, grab this liquidity, so that's the reason why this was not a strong low over here, and we just traded down lower. You will always need to wait for a nice point of interest just like this and this before looking for the strong highs and lows and use them in your advantage. So we already checked off what it is, and we now also checked off how to find those strong highs and lows. Well, how do we find those? As we just have seen, we want to see a point of interest, we want to trade in towards there, then we want to get a first reaction, so early buyers. This is where other people's stop loss are laying. Then we swipe those stop losses, and then after the fractal break, we then notice that we actually have created a strong low where we could place our stop loss underneath, and then we could trade up higher. So now I'm going also to talk about how to actually enter on those trades and then how to use them inside your entries so you will gain a higher win rate. So now how to actually enter on those trades. So as you can see here on the chart, we got the fractal break. So what do we know? Well, that this is our strong low. So we know 100% that we can place our stop loss underneath this low. Then what you need to do is take a look at the highs if you have a strong low, because that's the points or the point where you are going to trade towards. Well, why? Because you respect the low to be respected, so you expect to take out some highs. What I was looking at, well, I was expecting this high, and this high to get taken out, because I actually took this trade, and I also made a trade breakdown on it, which I would highly advise to watch. So I was expecting this liquidity high to get taken out, so I put my TP on top of that liquidity high, and then what did I do? I placed my entry for a 1, 2, 3 risk to reward, and then what I did, I just placed my entry, my stop loss, and my take profit, and I waited for my profits to get in my pocket. So now that we also know how to use it inside our entry model, well, now we can get a higher win rate. Why? We know what it is, so we know how to place our stop loss, we know how to find it inside the market, so we can actually capitalize on these forms of strong highs and lows, and we know how to place our entry on top of them and use the strong highs and lows in our advantage. So thank you for listening. I hope you guys learned a lot. If you guys did so, make sure to leave a like down below, and if you would like another topic, make sure to comment it down below as well, and see you guys in the next one. Ciao.